Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Moti Oswal studios, middle of the week, and we're waking up to a bump up in terms of US equity. So that's the handover, which is positive. I'm Prashant. With me, my colleague Surabhi and Nigel. Guys, morning.
Hi, morning. Folks. Bump up, yes, because they're playing catch up, right? Because of that Memorial Day holiday.
Yeah.
So finally, they're realizing that July 9 is still some time away. There's a month to play. And I guess equity participants feeling good.
Well, that's right. We'll have to wait by for July 9th to hear. July 4th, I think by then Trump wants a plan as well. So hands full, all eyes on Trump.
All eyes on Trump. And I mean, the man continues to tweet away, not about markets, but about students, immigration.
Yeah.
I don't know if you saw, there was a story which said that he's now threatening students that they must attend classes, otherwise their visas will be revoked. So, I mean, anyway, let's just take it from the top in terms of what you need to know as we start another session. Now, the S&P was up 2%. It climbed over 2%, and it essentially halted what was turning out, which turned out to be a 4-day slide. So 4 days down, and then there was a 2% bump. But remember, this is, of course, we are coming back. This is the first session for US after last Friday. Monday was a market holiday. So there is that bit of a catch-up as well. So S&P was up about 2.05. Nasdaq was up 2.47. The Russell 2000 index was up about 2.5% as well. So that's a broad change. I have to say this. Actually, two or three things. One, the move might seem very strong, and it is strong. 93% of the S&P 500 stocks ended in the green. But institutional participation apparently was on the lower side. So this was looked like this was more retail and momentum players at play. And then if you just look at it felt kind of squeezy and slightly technical in nature. More than anything, which was sort of, a big time fundamentally driven or anything. So that's the point. Lack of institutional participation and a technical kind of a move on the back of what? On the back of global bond yields sort of starting to fall off a little bit. Now, the 30-year, by the way, which has been the long end has been the focus. The 30-year was down the most. Yields were down there about 9 basis points. We're about 4.95 in the 30-year after staying above 5% for the last couple of days. The 10-year on your screen lost 7 basis points. We're at 4.45%. So come down as well. Now, two reasons here. One, of course, is, remember, this is not just the long end rising is not just a US phenomenon, as we've been pointing out. It's been happening in UK, Japan, and the US as well. The Japanese authorities have signaled that they will adjust their debt plan in terms of how much debt they plan to issue, which is, of course, through bonds. That is one. And the second, of course, is that there was an auction, as we said, this week, Tuesday, Wednesday, Thursday, in the US Treasury selling bonds. The long end only comes through on Thursday. Last night, 2-year bonds were sold, and there was decent demand. So those are the two reasons. Dollar index was higher, 0.4% or so. This is on the back of slightly risk-off kind of mood, 99.5 plus. Oil prices were down 1%. There is an OPEC Plus ministerial meet today, and the suggestion is, and there are reports which say that a third straight production surge could be possible in July, which of course means more oil in the market and perhaps, a lid as far as prices are concerned. There was also, of course, the US Consumer Conference numbers, the Conference Board Consumer Conference numbers which came through, which surprised on the upside. Now, one component, which is the labor component, was weak. And it kind of does point to the fact that, things on the labor side, unemployment, etc., will rise going forward. But the market, for what it did yesterday, chose to ignore it and focused on the broad headline numbers. I'll just quickly circle the levels in, tie the levels in. So on the downside, for the markets, support stands at 24,627, which is the 20-day moving average. It's about a clean 200 points away from where we left off yesterday, and then 24,462. On the upside, I think it's been pretty clear for a while. We need to take out 25,116. That is the first number, and then the 78.6%, which is 25,310. Only the averages have moved on a day-on-day basis, that too by a couple of points. Otherwise, I mean, the numbers, the retracements stay the same. For the Nifty Bank, support stands at 54,576. Which is the first support, and then the 20-day moving average comes in, which is 54,991. Those are the two levels, and immediate resistance here is 55,875. So very, very near term is what we are looking at this point. Gift Nifty will give you a quick sense of how we are starting. It's like yesterday, about 10-point change, absolutely sort of no regard to the 2% bump from last night. But I think that 2% bump last night, it's not showing up in a big way in Asia as well, and maybe for good measure. Surabhi.
Well, Asian market's actually more positive than negative. The Hong Kong market is the one that's under a bit of pressure right now. But the others, I mean, Japan, for instance, is back to gains. The South Korean market is doing very well this morning. The Kospi surging 1.5% thereabouts. And other markets like Singapore, Australia, largely positive. The outlier is the Hang Seng at this point. Now, the whole EU sort of partial rollback, that's been well digested by markets over the last 2-3 days. The next big lookout is the NVIDIA numbers, and they come out tonight. And the thing is that NVIDIA is probably, the estimates are it's probably going to report about 60-65% kind of top-line growth, which is great. But look at it, look at the distance from the 200% plus kind of growth that it was reporting up until the year back. So will the market continue to have the appetite? The numbers are also very important this time because the impact of all these restrictions with the US, which the US announced on exporting those NVIDIA chips to China in specific, the impact of those restrictions will play out. In fact, NVIDIA said that it's probably going to be taking a $5.5 billion charge because of those inventory-related issues. And let's see how this plays out. The company's CEO has already gone on record saying that NVIDIA's market share in China has come down from 95% to now just about 50%. So that's the big event that's in focus for markets around the world. Now, in Japan, while the equity market's going up, the yen actually has been cooling off. Yesterday, the yen slipped almost 1% versus the dollar. Today, this morning, it's recovering a bit from that loss. Now, why did the yen fall so much in the last 24 hours? Because of reports that are now indicating that Japan could be cutting back from issuances of long-dated bonds. Remember, Japanese 30-year bonds, 40-year bonds, their yields had started surging. Now, it seems the Bank of Japan is thinking that it will just reduce the issuance a little bit. And that played its part in the bond and the currency markets yesterday. So that's largely the Asian cues. Of course, for us, our market was underperforming all global markets yesterday. Let's see, the bulls will hope it's different this time around with that cut of about 150 odd points. Now, yesterday's flows numbers are very interesting. And remember, they're skewed by those large blocks, whether it was Sagility, whether it was Interglobe or PG Electroplast. So what we have in terms of the flows picture is a very large DII buy number, 10,000 crores, 10,100 crores of positive DII flows coming in. The FPI number is again a trickle, just about 350 crores. But remember, it's being skewed by the block. So we have to watch out for this. Speaking of blocks, more stocks in focus. British American Tobacco, BAT could be selling stake in ITC. They've disclosed that they could be selling up to about 2.3% thereabouts. They'll still be the key sort of shareholders of holding in excess of 20%. But that is something that could be weighing on ITC. Last time when they sold stake, it was a massive trade. And even this time, it will be a block of over $1 billion whenever BAT decides to come to the market. In addition, of course, the numbers as usual. I'll look out for market reaction to Bharat Dynamics. Remember all the defense stocks that have been going up. Its revenue has doubled, but margins and EBITDA is under pressure. So let's see how the market deals with it. Nuvama has come out with very good numbers. Profits up 78%, revenue up 15%, and the margin has surged from 31% to 36%. I'll definitely be watching out for this specific earning reaction this morning. So plenty of excitement this Wednesday. Nigel.
Well, that's right. And if you look at the screen, actually, the sense you get is even though yesterday we had a bit of a down day, it's not yet worrying. And, you'd still fancy your chances if you look to buy the intraday dips. Now, since we have expiry tomorrow, let's first focus on the rollover picture. And the Nifty rollovers actually are relatively higher. 2 days before expiry, D-2, it's at around 60%. The last series, it was sub 50%. While the Nifty Bank, well, that's almost in line at around 51%. The last series, it was at around 56% or thereabouts. So what do the FIs do, though? They added short positions in yesterday's trading session. So on index futures, they added close to around 14,000 short contracts. There was some mild unwinding of longs. And even on stock futures, there could be an arbitrage at play out here. But they added close to around 47,000 short contracts in the ratio of 3 shorts for every 1 long call on stock futures. How are they positioned right now? The FIs, well, they are net short with close to around 67,000 contracts on the short side, while you have clients that have almost an equivalent amount on the long side. But since we have expiry that's going to be playing out tomorrow, and that's going to be the big monthly expiry, the options data is important. And the FIs, they're writing more calls than puts, so they believe that maybe the higher levels will get protected, at least in the near term, going by the data points, because yesterday they added close to around three short calls in comparison to, to 1 short put in trade yesterday. The PCR. I like the look of this, right? A few sessions ago, it had danced a bit around 1.2, 1.3. It's gradually coming to the lower end of the range. And if the Nifty dips today, the odds are that it comes closer to around 0.7, 0.75 or thereabouts, which in fact tells you that it's not such a bad cue for you, the PCR cooling off. Now, the options data, 24,800 call, 24,900 call, both of them fairly active. Aggressive writing is what we're seeing out there. But the 24,800 put as well was active in trade. That's telling you that lower levels could get defended. And just looking at the 24,900 call, the premium's around 170 rupees. And you plug in the last two sessions, the highs of the day, which comes in that vicinity of around 25,060 to around 25,080. So because of the options data and because of the highs that we saw in the last couple of trading sessions, this becomes the crucial resistance zone in the near term. So that's the mark you're going to be looking at on the upside. On the downside, going by the options data, well, this becomes the important mark, as well as the 20 DMA comes in at around the 24,630. You'll want to buy closer to around this level. So yesterday was a bit of a down day. The data points, though, are not very, very worrying. You'll still say that this market is trending up and you'll want to buy the intraday dips.
Okay, all right. Got that point. Thanks for that, Nigel. Let's actually get started then with the equity call of the morning. Chetan Chetha for Nomura expects choppy markets over the summer as several risk events are on the calendar. He says their fair value estimates for Asia ex-Japan stocks imply limited potential upside and thus a focus on stock selection. He adds on their assessment, they think India within the emerging market space and Japan within developed markets appear best positioned to recapture any reallocation flows should investors diversify away from the US. So it's Japan and India, which Nomura thinks will get the bulk of the flows.
Okay.